getting a little bit gnarly out here, right? What did we talk about last week? We talked about the fact that Bitcoin was consolidating over this moving average, potentially setting up for a higher move. But what do we get? We're getting the break below the moving average, potentially going to close this weekly candle below the 200-week moving average. So that sets up this scenario, which, if you remember correctly, this is what I said was my ideal situation. My ideal situation was that we do have a major broad market sell-off, and I think that's in the makings right here. And now, if we look around the rest of the crypto market, like just highlighting some of my favorite things, the things I've been accumulating, it's like, look at this. Oh, kid, right? Like, oh, ouch, like that's painful, but that's actually the greatest, right? This is what I wanted. This is what I asked for. This is good news to me. This is now setting up the situation where we're going to be able to accumulate crypto at the absolute most gut-wrenching lows imaginable, right? Because look at this. You're about to potentially get the lowest weekly candle close you've ever had in TRB. Well, that's not true. Not ever had, but in recent history. So that's something. Check out, like, it's happening all across crypto. I mean, they're selling off big right now. This weekly candle is breaking to new lows right here. Bond, it's getting gnarly. Let's look at SNX. Like, this stuff is just, yeah, look at this. This is all heading back to new lows right here. Potentially new lows, or at least local new lows, potentially to break that low that we had in December of 2022. But the thing to keep in mind is that we're still, if we just look at Bitcoin, we're still within an uptrend. And this sell-off is all fair game within that uptrend. And like I said, all the way down to the inverse 702 is like, that's kind of to be expected. Now, maybe it won't get that low, and it's probably reasonable to start accumulating before you get down there. But the fact that we broke through the 200-week moving average and we're about to close a weekly candle below it, that's telling you that we're now going to be in an accumulation phase that could last a while, and it could dip pretty low. But that is all good news. So let's try to look at the broader market here. Specifically, I want to look at Apple, because Apple had some important news this week, right? It came out with their new virtual reality things. Now, the thing I want to say about this is that this could be a big deal, right? I think a lot of people said the virtual reality helmets are like bad or something, and they're just like ski masks or something. Like, people are just like, they're shitting all over them, saying it's garbage, whatever. But what I would consider here is that is actually a paradigm shifting technology, right? Because what I've heard from just checking out actual reviews on these VR helmets is like, they're actually high quality made. I mean, they cost $3,500. They're made with good quality, products and resources, right? So they're not garbage. I would consider, and maybe I'm just way out of line considering this, but I would consider that those VR things that they made are somewhat comparable to the paradigm shift that the iPhone made, okay? Now, maybe you think I've lost my mind in saying that, but think about it. Like, the iPhone didn't catch on immediately, right? And what I really want to do is look at the chart from when the iPhone came out. Let's actually go to the monthly chart here. So the iPhone came out in the summer of 2007. I remember it crystal clear because I was at a music camp, and one of the directors at the music camp got the iPhone and was showing it off, and I was like, I don't care about this. What is this? What are you showing your iPhone off to children for? It was just like weird. But anyway, let's look at this, right? Let's look at the summer of 2007, right? When the iPhone dropped, right? It was specifically, I have it pulled up here. It was specifically June 2007. That's when the first iPhone dropped. So what was going on in the charts in June 2007? That was right around here, right? Look at this, right here, right? So you're kind of almost coming into a blow off top, right? So it's kind of the classic scenarios, like they come out with this massive product, right? The market roars higher only to then hit the great financial crisis, right? So I don't know, it's just something to keep in mind, right? Like, you have a very paradigm shifting bullish catalyst, and it comes at the top of a major, major up move. Like, look how long this thing's been moving up. Like, basically, since the tech bubble, Apple has just been a straight moonshot, right? And then the iPhone comes out sort of at the top of that moonshot, leading into the financial crisis. And then what happens? You literally go on a permanent bull run, right? Like literally the bull run that's still going on right now. And I think you have to acknowledge that the iPhone is a major reason why Apple has been such a great asset to hold since literally, the financial crisis, right? It's basically just gone to a straight line to the upside. But if you consider that schematic where they come out with this new paradigm shifting product, right? And then you go a bit higher only to then have like a bad, literally the great financial crisis to occur. Literally it starts in that year. Like the financial crisis began in the fall of 2007, right? It finished in, the winter or early spring of 2009, but it began in the fall of 2007, and the iPhone came out in the summer of 2007. So it's like, are we in that scenario somewhat? I mean, I'm not saying we are or we aren't, but it's just something to consider. And then if we look at the chart today, what we see that's important to acknowledge is that Apple did break the all-time highs. That sort of paves the way to kind of get to that 1618. And how much sense would it make if we literally hit the 1618 and then the financial crisis occurs, right? Financial crisis relating to what's going on with the banks, what's going on with just the traditional financial system in general. It's sort of crumbling. This would all be putting, major downward pressure on the markets. But this is potentially getting into that sort of like blow off top, frothy area before something really bad happens. Now, when we go back to crypto, just snapshot this in your mind. Look at Apple for the past 1, 2, 3, 4, 5, 6 weeks, right? 6 weeks just roaring to the upside. Finally pierces the all-time high. And what is crypto doing in this time? So this is where we have to sort of, think hard, right? So crypto has been doing, nothing. It's sort of been bull flagging, and now it's sort of breaking below important moving averages. Not a great look for crypto compared to Apple. But as I said before, the fact that crypto hasn't been participating in this tech rally, the rally that we've seen in the NASDAQ, obviously in Apple and Microsoft and all the major tech companies, crypto hasn't been participating. I think that was always sort of that warning shot that the market is going to be coming into sort of some pullback summer time, right? So summer is going to be sort of like, basically a bearish time, more or less bearish, but it's bearish within an uptrend, right? So it's a major pullback within an uptrend. Now that we've switched over to the monthly candles, it's like you could easily picture, 2 or 3 even more monthly candles where Bitcoin is just pulling back, right? Obviously, the obvious target is going to be that inverse 702. So you could sort of picture that, right? And you could sort of picture the same thing happening with Apple, right, before a major rip to that 1618. So it's like Apple breaks to the new all-time high, right? And now it's potentially going to pull back, right? It would make a whole lot of sense. That's oftentimes how these charts work is you pierce that all-time high. You kind of like make it clear that the asset is in a relatively long-term bullish setup. Like this is all potentially a massive bull flag that goes back to December 21, right? This whole thing could be described as that. It is the definition of that, right? You have a huge uptrend, right? You have consolidation at the top of that uptrend. Now you've broken the all-time high. It would make sense you have a little bit of pullback, 2 or 3 months of pullback, maybe consolidate around that 702 before your big rip to the 1618, right? That's sort of the schematic that I see aligning with the cryptocurrency market is you're going to have this sort of summer pullback, but that's all going to be setting up for a giant tech rally. And I think that's likely to occur, maybe September, October, November, or maybe into the end of this year. That sort of seems to be the setup because when we look back to semiconductors, this is important too. What did I say that was possible for semiconductors to do? I said it was possible for them to back test the 786 or the 702. Right now, it looks like it's finding a lot of support at that 786, which is incredibly bullish, right? That's the most bullish scenario. So it feels to me like this whole correction, obviously you see it here in the SMH and the semiconductors, but it's the same thing for the SPY, the NASDAQ, the Dow Jones. I mean, they all had this massive correction that began at the end of 2021, right? that correction sets up this local Fibonacci structure, which gives a lot of credence to the idea that the 1618 has really just been the target all along. And that was like one of my earliest thesis speculations that I had, was that this whole pullback is just to set up a giant 1618. And I did say, 1618 is where the whales dump. Traditionally, if you look at the history of markets, you see 1618 is just like a classic place where the blow off top finishes, right? And you have a perfect setup to take us there. And it would be obviously incredibly euphoric, so frothy, like everybody would be talking about stocks, everybody would be talking about crypto, and that's how you know that you're at the top. But that sort of seems like really feasible at this point, especially when you consider that semiconductors are sort of, they're the canary in the coal mine for the entire tech sector, right? If semiconductors are bullish, then Apple's going to stay bullish. Crypto is going to stay bullish, right? But it seems that crypto is lagging behind. But if we're about to have some kind of, consolidation up here before the final blow off top move, then that's going to be your perfect setup to be accumulating cryptocurrency all summer and then get potentially a major altcoin season kind of thing happening, right? And so when I see, just like, let's look at the total. Let's look at total. When we just see the broader crypto market just coming in some major weakness right now, it's like, this is literally the dream scenario. I mean, this is what we've been looking for. This is now people starting to get scared, right? Because you have, SEC just throwing temper tantrums left and right? They're literally trying to kill this market. And guess what? I just don't think they're going to be able to. It's kind of the perfect scenario where you have all this regulatory attacks, right? You're scaring people out of the market. And then only just to set up the perfect, massive bull run that happens when everyone has completely lost all their faith. And I suspect that people will have lost all their faith when this index gets somewhere around that inverse 702, right? So there's more downside ahead potentially, but that's all, the dream scenario. That's all major accumulation, because I do think, based on what the semiconductors are saying, and also based on just the macro environment. I mean, we passed the debt ceiling. We're coming into a phase where interest rates are going to be forced to go lower because the United States is taking on more debt, right? Simple equation there. United States is going to take on more debt. Obviously, interest rates are going to have to come down. Very, very simple thing. And when we talk about when interest rates come down, that's your final blow off top, right? Because interest rates come down sort of as a leading indicator that the market is actually really weak. But because money gets cheap in that moment, markets become euphoric and very frothy. So that's sort of your, explosive blow off top. That could happen very, very quickly. I mean, the Fed is going to literally come out this week, right? They're going to make an interest rate announcement. I think a lot of people are thinking that they're going to go flat, right? Like this is going to be the first meeting where they don't raise, right? If that's the case, then you're in that final phase. But I tend to think that the Fed might actually raise by 25 basis points one more time. I think that's possible. That's something to consider. And obviously, if that happens, the market is just going to hate that, right? It's just going to get absolutely freaking smoked. And the fact that crypto is sort of already showing that kind of pullback within the uptrend, that makes me think it's very possible that the Fed does raise by another 25 basis points. And then potentially that's their last raise. And then you're starting to form that, major blow off top that happens when interest rates go flat. You're starting to form that schematic, beginning in July and August. And then you have like classic, September, October, November, like epic psycho blow off top bull run situation, because interest rates may start to come down, in the fall, potentially. If they're going to flatten in the summer, they might come down in the fall. Potentially. That's all speculation, but it is something to consider that the market is very much expecting the Fed to not raise. So if the Fed does raise, get ready for like major capitulation, get ready for VIX spikes, right? So that's the major position that, I'm acknowledging here is like the VIX is getting really close to an obvious target, right? That inverse 1618. I think that makes a whole lot of sense for the VIX to be targeting. If the VIX gets down there by the time that the Fed has their speaking thing, then yeah, I wouldn't be surprised to see the VIX absolutely spike, because the Fed is going to surprise the market and raise by 25 basis points. It really doesn't make any sense that the market is expecting the Fed not to raise. There's really no reason that they should be expecting that, but that is the consensus. Like if you go to the Fed Watch tool, the consensus is that the Fed is going to not raise. But I don't see that. That doesn't make any sense to me. In this particular situation, it doesn't seem like the likely scenario. It seems more likely the Fed will raise at least one more time. And that's going to surprise the market considerably. Part of the reason why they would raise is literally just because they still want to look like they're acting tough on inflation, right? And now, especially if we're going to have a whole bunch of money printing because, you know, the United States government is about to take on more debt, that's technically inflationary, right? So the Fed would want to continue to keep rates elevated in that scenario. But the other thing that's working against them is the fact that when the United States goes deeper into debt, they can't sustain debt at a higher interest rate. So the Fed is sort of at that crossroads of like, they need to stop raising interest rates because the United States can't service the debt at a higher interest rate, but at the same time, they need to look tough on inflation, which means that they would need to continue to raise interest rates. So that's why I feel that the June interest rate meeting would lean towards them actually raising, because then at least they're not looking like they're scared that the U.S. is taking on more debt, right? And it's all just sort of an optics thing, right? The U.S. doesn't want to look like it's a bad thing to take on more debt, right? So if the Fed raises interest rates, it's sort of that idea of like, oh, no, it's no big deal. Yeah, we just take on like, you know, another whatever, 2 trillion or I don't know. I don't even know, just multiple trillions. And it's like the United States is like, yeah, no big deal. Like we can take on more debt. It's fine. Yeah, Fed can keep raising interest rates. We're good. It's all good. But you can tell that that's just like a complete facade. And really, that's like the makings of a real financial crisis, something a lot worse than what happened in 2008. So that's kind of what I'm seeing this week. I feel like the VIX could fall in the beginning of the week and then potentially make a violent move to the upside in the event that the Fed surprises the market and does raise by 25 basis points. So that's what I see. And I do see all of this sort of just setting up that ultimate crypto accumulation summer. And I mean, this is what I've been looking forward to. And I feel like now this is the first time where I feel pretty confident that we're going to see a relatively bearish summer for crypto and maybe get as low as, you know, somewhere around that 20,000, just below 20,000, and just, you know, horrific sentiment. You know, everyone is running for the hills in crypto, just getting out. It's like that feels like what's potentially coming, you know, especially if the Fed does raise in June here. So that's the way I'm thinking about it. I'm definitely positioned long on the VIX right now, and I'm just selling. I'm selling things at the top. I'm selling this frothy stuff, right? I mean, the one thing I would consider is that the SMH is just making a bull flag here, because if you look on the daily chart, then it's like, yeah, it kind of looks like the thing could actually just rip higher, right? It kind of looks like that's a bull flag, right? So that could invalidate everything I'm saying about the Fed, and, you know, the SMH sort of looks a bit bullish here. But that's what I said about Bitcoin last week, right? I said Bitcoin was forming a bull flag. Makes a lot of sense that Bitcoin could continue higher, you know, within that uptrend after consolidating. I could make the exact same argument with the semiconductors, and then they could still dump, exactly like what Bitcoin did. So, you know, this is why it's not about being right or wrong. This is not the game we're playing. It's about learning how to use hedging properly so that you're always generating profit in every scenario.
The challenge of duality is practicing balancing the attacks with the yielding backs, always allowing matter and energy to feedback, assembling third-dimensional physicality, faithfully creating in the name of the Almighty, collaborating with the master of the intergalactic community, unleashing the alchemical beast of the integrated ascendancy, following the thread of precedent. Solutions are revealed as evidence of a collaborative force guiding us toward the precipice of excellence. We must accept this. Incredulous eloquence, epigenesis, and artificial intelligence, the menacing shadow must be integrated once again. It's a cyclical phase where the collective initiates.